Part two, why is your pension absolutely underperforming? Let's have a look at the S&P. Now, the S&P, all-time high, wonderful. As I've said, week in, week out, I have not just the index tracker on that, but 3 times leverage on that, and I'm happy to continue holding it because I see the momentum continuing forward. However, what you have got to know is what's the peak to trough drawdown in an upward trend. If you don't like the peak to trough drawdown and the duration for it to recover, okay, drawdown danger equals depth times duration. If you're not happy with those numbers, and it might be 20% and 3 months, whatever your numbers are, then don't invest in that particular instrument, whatever it is, because that's your risk appetite. And if you don't want to have something which has the same, which has a risk appetite you're not comfortable with, because you might not be able to be me. By the way, over the last 9 years, 100% of the time, the S&P's gone up in July, and it's been the second best performing month for it. Okay, and that's how you tell mean percentage change, positive periods. So should be a good month. All right, certainly was for me. I've got 3 times leverage on that little baby and 3 times leverage on this using exchange traded funds and the index tracker, my son's junior ISA and the like. Okay, so that's where we are. There's your drawdown depth and duration. And by the way, for those who don't know baby bears, mama bears, you look at the monthly, and this is all free, by the way, on, I'm not affiliated to TradingView. You look at the monthly MACD. If, regardless of whether the price is falling, if the MACD is rising, it's a baby bear. You can ignore it. If the MACD is falling, like here, it's a mama bear, and you can either ignore it if you're risk loving. If you're risk averse, you might take some money off the table. And if it's a daddy bear, like it crosses below its own moving average from a height, then it's a daddy bear, and you probably want to go into cash as we did in most of 2022. Simple. Ignore, cash. Ignore, cash. Keeps you calm. All right? So, FTSE 100, where are we? The elections happened as well, so should hopefully continue in that upward trend. That's the S&P 500 stocks, the ones that have risen the most over the past month. So let's have a look at these. Let's have a look and see if we're missing a trick or anything else with any of them. So Tesla has now, the monthly is the blue dotted line, has started to move up. The weekly is moving up in the right direction. We should see a continuation of those rises. Be warned, you will definitely get a mama bear in between. It'll probably do something like this. It is broken out from that downward trend as well. And I suspect it's probably going to have a go at its all-time highs. All right, so there's your Tesla. Broadcom on our value growth income ticks the box, 7. It's a bit overbought though. So normally it wouldn't fit my requirements. However, you might be happy enough to take that extra bit of risk, follow what the analysts are saying, whatever else, follow these, up to you. But you might be willing to say, well, actually, it's Alpesh's 7, 8, or 9 value growth income. I appreciate there's momentum there, and then your exit is really simple. If it drops X, you will sell Y. Now, X could be 10, 15, 20, and you will sell Y. Y is dependent upon your own risk appetite. Okay, simple as that. Why is it your risk appetite and not an exact number I can tell you into the future? Because I don't have a bloody crystal ball or a time machine. If I did, I'd tell you exactly, oh, if it drops 15%, then get the hell out of there. Okay, so that's why. Adobe is now a 7, which means it meets our criteria. And I think it would qualify as a special situation because the MACD is rising. Now, there's a reason you might not want this, because you might well say, wait a minute, in an upward trend like this one, I don't like the drawdown depth and duration for recovery. That is more risky than I'm willing to take. So then don't have Adobe. If in doubt, leave it out. Okay? CrowdStrike doesn't meet our value growth income. Momentum is good, I know. However, in earlier periods, like here, may well have got our value growth income at 7 and the momentum was fine, and may well have been okay. Like so many, we can't look at every stock. And in those periods, they'll come along for other stocks. But at the moment, this one misses the value growth income and it's a bit overbought. I'm not saying it can't continue higher. It might. I just don't want to take that extra risk. And I'm well aware July tends to be always an up month for it. Arista Networks, very smooth. 7, 8, or 9, perfect. But that momentum worries me somewhat. However, if you said, no, I want to get into it, then fine. But just set your X and Y down there. Oracle, similar story. There's quite a few overbought ones. So just be careful, because in the past when they've been this overbought, they've then gone and dropped 20% and had ages to recover. Okay, so just be careful. When it's been at those levels in the past, what did the price do? When it's at those levels in the past, what did the price do? Okay, Corvo, 7, so fine. It's sort of chugging along. But again, you might say, oh, Alpesh, I don't like that. It's all over the shop. Not for me. If you don't like the roller coaster, you don't have to get onto that one. There'll be others coming along, which you prefer. FedEx, 7 as well. That seems fine. However, once again, you might say, actually, I don't like the look of it. Fine. Palo Alto Networks, CEO, my friend Nikesh Arora, overbought. Look at that drop in an upward trend. Look at that drop, massively off a cliff. Okay, now the Americans have a tendency of dropping loads and then recovering as well. Snakes and ladders. Overbought, doesn't meet 7, 8, or 9. I'm not saying it can't continue this upward trend. It's a good cybersecurity company. He's good at making money. However, doesn't tick enough boxes for me at the moment. Not saying it's a bad company. That's a 7, but that's overbought, so not for me. Costco, okay, again, you might buy it because you say, look, Alpesh, I don't care about this, I don't care about that, I just like this, Alpesh, and I like that these companies like it, and I like this. That's up to you. That's perfectly fine. But for me, if it's not a 7, 8, or 9, and that doesn't hit, then sorry, it's not quite right for me at the moment. And I will get back in the future at some point when this pattern repeats itself, which it will. It will repeat itself. It's rinse and rewash. The pattern there, it was the same there, and it was the same here, and we made a killing here, and we can make a killing again when it does the same thing again, and it will. So don't worry. Apple, you know my positions on Apple and how much I've got. And just to let you know, yeah, I do. Thank you. And my son, 2 times leverage. You know my views on Amazon if you're on the Great Investments Program as well, and on Microsoft, and the size of the positions I've got on that, and what my son and wife have on it as well, and on Meta, you know my positions there. I'll come to some more stocks. Bank of America. Now, this is just because I'm telling you market update and financials are doing well. We will be looking for more positions which have 7, 8, or 9 here. I don't care whether it's a Bank of America or it's Jelly Bean Manufacturing Company. 7, 8, or 9, rising MACD, as indeed this was back in that period, because we're looking for those rises. Okay. Netflix is a 7, bit overbought at the moment, but if you're in it, you'd stay in it because it hasn't dropped X, so you don't need to sell Y. Simple as that. But you would look at it and say, well, I don't like those drawdowns of 26%, it's not for me. Now, it's not what I'd buy today because I'm fully invested already anyway in everything else. But if I wasn't, my only concern would be that. Now, for some of you, you won't be bothered with that, in which case, don't forget the exit. If it drops X, sell Y. Walmart, another great one, but overbought. Again, you might say, well, it's got your 7, 8, or 9. I'm going to get it, Alpesh. And look at all these people who love it and look at these numbers. I'm going to get it. Well, fine. If you get it, if it drops X, sell Y. I'm just worried about the MACD. I'm fully invested anyway, so I can't. Tesla, I've covered. Berkshire, no, because it's overbought. And that's what it looks like when they're about to possibly drop. So be careful. Eli Lilly, similarly, great. Probably one of those which should have been one of the quality 5. 7, 8, 9, or 10, overbought. Lots of money to be made in that. But at the moment, for me, because it's 7, 8, 9, or 10, isn't ticked and it's overbought. It's not one for me at the moment, but there will be another time and we'll be keeping an eye on it when it goes back to this kind of pattern and we get in again and triple our money again. Okay, it's as simple as that. This is a baby bear. Why? The monthly's going sideways, so it's a baby bear, so you can ignore the falls. CVS. Now, it's below its own moving average already anyway. So if you wanted a lower risk pick, you'd always pick the ones which are through their own moving average and never have in an upward trend falls which you can't take, like a whatever your number is, 20, 30 or whatever. Block, I haven't got time to go through all of these anyway, but just showing a bunch there. Thank you all very much. Have a look at alpeshpatel.com/links. And my Telegram channel, which is on there as well, alpeshpatel.com/links. Thank you very much.